Everyone, welcome back to the Ashworth Wealth Weekly Market Update. We're back this week again to discuss everybody's favorite topic, which is, of course, tariffs. Um, it's been the topic, probably the most talked about topic, at least from an economic standpoint, over the past couple months, but it is continuing to have an effect on what's happening in the economy. And now, as more reporting is coming out over the past couple of weeks, we're starting to get a better idea of actually what this is looking like from an economic standpoint. Probably the biggest thing to be paying attention to right now is productivity. Um, so there's a lot of uncertainty out in the markets, of course. As you've seen, we saw big dips at the beginning of April, followed by pretty big rises to where the year has been down, yes, but not down very much, especially compared to what things were looking like at the beginning of April when things really kind of got crazy, some really, really big swings. Now what we're starting to see is what's happening in the labor market, which frankly, what's happening in the labor market is that the labor market is still very strong. The April jobs report showed that businesses added 177,000 jobs during the month, almost 400,000 during the fourth quarter, which is really, really good. Nothing wrong with that. But what the data is kind of potentially suggesting is that we're maybe entering a little bit of a slowdown. And the reason why we say that is because it's coupled with a reduction in productivity, meaning the output of these companies is not matching as much as, well, it's not matching what the labor market is showing. So what does that mean? It means that margins, specifically profit margins, are going to be down a little bit, or at least that's what it's looking like. How does all of this affect us? Well, there are periods of time when we go through recessions. That's just part of the nature of the beast. A recession is a natural part of an economic cycle. Now, this one appears to be a policy induced recession, which, once again, we don't like to get into governmental policy a whole lot. It's just important to understand what's going on. Like the policies, love the policies, hate the policies, it's just important to know that they do have an effect on the economy. However, those effects are generally speaking fairly short-lived because, as I've said many, many, many times now, business tends to figure out a way around governmental policies. They have to. They have to be efficient in the long run in order to maintain profits and increase profits, and that's how stock prices increase. So even if we do go through a period of recession in the near future, those periods are generally pretty short-lived, and I don't see any reason why this one would be much different. Of course, we don't have a crystal ball just like anybody else, but the most important thing through all of this, and it's the same thing that we say over and over and over again, is that we want to maintain our long-term focus. We want to maintain our strategies being globally diversified so that if the United States does go into a little bit of a recession, it is highly likely that not every segment of the world is going to be going through a recession or the same level of recession at the same period of time. So if we have a globally diversified portfolio, we can shift assets, we can maintain our balances the way that we would like them based on your risk profile, and in the long run, that ends up making you more money. Yeah, retractions are not fun, but as mentioned, they are still very important and natural parts of the economic cycles that we go through. So, how do we make sure that things are being taken care of? Well, we're of course paying close attention to your portfolios, and if there is something that can be done to help those portfolios, we'll make sure to do it. But the thing that can help your portfolio the most is keeping your eye on the prize, which is a long-term investment strategy. And as long as we maintain a long-term investment strategy, we can go through periods of recession, even if they're relatively deep recessions, and come out the other side stronger because of it. This happened in 2007, 8, and 9. It happened in 2018. It happened in 2020 as we went through economic retractions at those times. So we, of course, welcome the chance to talk to you. We've been able to talk to most of our clients over the past couple of months through the spring. But if you have any additional questions or comments, or if you are concerned about what's happening, please let us know. We do keep an eye on what's going on in the economy, but we're not swayed by what's going on in the economy. So this is just another example of us being in a period where Could we enter a little bit of a retraction or a recession? Yeah, we could. But our portfolios are well built to withstand that in the long run. If you feel like this information can benefit anybody, please feel free to share it. If you have any questions, please feel free to reach out. We appreciate each and every one of our clients and the trust that you put in us to take care of your money. Have a great rest of your week, and we'll be back in touch soon.